3, 2, and, well, you know the rest, 1. What's up, everybody? This is Max Pitts with Trades and Gains. Let's go ahead and make like a condom and wrap up today's tape, because the options market told a much clearer story than what price action did today. Indexes chopped and then ran into the end of the day. They initially sold off, then they ran right back up. Typical behavior that we see. Headlines went ahead and screamed because Trump is currently in Davos, Switzerland, at a resort where he's supposed to get a reading on the economy, which is a lot like crying yourself to sleep, but you're doing it in a Ferrari. You know that song, like, would you rather cry in a Nissan Altima or a Ferrari? Well, yeah, we're living that in real time right now. But guess what? Dealers and institutions, they were calm, calculated, and surgical, like you were getting your first colonoscopy. Tonight, we're going to go ahead and break down why IWM quietly stole the show for the first time, kind of like that neglected redheaded stepchild that the parents start to pay attention to finally, why SPY flow stayed defensive, why gold is back in the conversation, and why NVDA, Intel, Tesla, and silver all scream selective risk and not panic. This is your end of day options flow recap powered by Investor Central Club. Don't forget, use Stacks Apex 20 to get 20% off your first month. And let's go ahead and dive straight into this, shall we? So to kick things off, IWM was the winner chicken dinner with 104 million in total overall flow, 67.28 million going into calls against 37.23 million in puts. Now, if we go ahead and look at our most hit contract, we were looking at the February 20th, 2026 251 puts, which is about $17 out of the money at this point. So about a 4.97% move is what it's looking at. Even more, I think. Yeah, it's going to be a lot more than 4.9% at this point. I think it'd be closer to 6 or 7%. Overall, it was still leaning bullish on the day. If we go ahead and look at our overall IWM flow, let's go ahead and look at WaveX as well. As we can see with here, WaveX, we saw a nice little bullish flip at about 12.13 today, and that call premium just kept pumping. Now, let's not forget this IWM, we also saw a surge in puts here at the end of the day as well, so that is one thing to take a look at, because this is not retail gambling. This was structured, repeated call buying and some underlying hedging going on, and that matters. Now, what does the flow from IWM tell us today? Well, funds are positioning for a catch-up trade. Small caps are being treated as rate cut leverage. Shocker, because what do I tell you guys every video? IWM is the only true and clear winner of rate cuts coming into play. And this is rotation flow, not day trade noise. Small caps tend to stiff out policy shifts and liquidity changes early. This flow is telling us if rates ease later this year, IWM will be the first to go, okay? This is not bullish euphoria. Let's just call this early positioning. Now moving on, next we have GLD coming in second place with 82.73 million in total flow, with 73 million going into calls against 9.69 million going into puts. Our most common smacked up contract with 3 hits total were the 445 calls due for January 30th of 2026, a 0.13% move downward because these are technically in the money. What can we say about this? All right, this isn't a hedge. This is just straight up conviction. All right. Translation, inflation isn't dead, and it's just hibernating right now, because what do we get tomorrow, folks? Answer in the comments. But I'm going to spoil it for you. PCE. All right. And I already dropped a video on PCE and those scenarios, so go ahead and watch that if you haven't already. Real rate uncertainty is definitely back, and this is portfolio insurance, but with some upside. Gold flow like this usually shows up when bond volatility picks up, macro confidence is starting to crack, or markets are starting to price policy mistakes. Now, our biggest contract of the day on gold, were the 455 calls. About 60 million dropped into those heading into January 30th of 2026 as well. So again, 455 calls, about a 2% move expected here. Is this showing that there's some uncertainty going on with PCE for tomorrow, with data we're potentially getting next week? I don't know. We're going to have to wait and see, but that is one thing to watch out for here. This is not fear. This is what we like to call discipline and protecting your portfolio at all costs. Now, our next, coming in third place, taking home the bronze for today, was SPY. 58.51 million in total flow, 9 million in calls against 48 million in puts. All right. Our most active contract with SPY today were the February 20th, 2026 646 puts, and this is about a 5% move that they're expecting on SPY. By the way, big shout out to the trades and gains community today. Everybody banked both ways on SPY and IWM and QQQ. Ace and Malibu Marky both called the top and the bottom on these plays today. $10 a month, don't miss out on it. All right. Anyways, this is not bullish, obviously, but it's also not panic selling either. What this SPY flow is really telling us is institutions are net long elsewhere. SPY is being used as a portfolio protection, and dealers are preparing for volatility, not necessarily collapse. This is classic. We'll keep risk on, but we're not going to go in naked with our hands around our ankles. As long as SPY stays the hedge bucket, broader risk will still stay alive. And then we have QQQ. All right. QQQ is the next one up that we're going to talk about. With QQQ today, we had 31.38 million in total overall flow, with 15 million in calls against 16 million in puts. Our most hit contract were the January 22nd, 2026. So it looks like for tomorrow, actually, 616 calls. All right. So they were expecting about a $1 move up. Granted, these were all bought early in the morning, so they could easily be out of them. Again, this is a pretty boring tape, if we're being honest. And that's actually important, because what this means is there's no aggressive downside bets that we have to be concerned about. There's no chasing into the upside, and consolidation positioning. Big money already owns tech. They're just not looking to add here, but they're also not exiting either. This is digestion, not distribution. And that is the main way to look at this. Now, finally, we have Intel, which, speaking of, I believe they are still on quite the run, because we had 21 million in overall flow today. Oh, wow, daddy. Yeah, this thing just pumped up to 54.83. Congrats to everybody who held our original call out with Stacks AI as well, because that should be printing pretty nicely. We just saw $65 calls being bought, $279 for March 20th of 2026. And I believe that maybe, oh, nope, that was just an unusual big money print. All right, so we saw, again, 21 million, 20 million in calls against 1 million in puts. All right. Our most active contract of the day with 12 hits were these $70 calls due for January, February, March, April 17th of 2026. We had 12 hits on these. Yep, 12 total hits, boys. Talk about some conviction here. So does this mean we're going to see a good Intel earnings? Does it? Maybe. I guess we're going to have to wait and find out tomorrow, right? Now, yep, they are going earnings tomorrow. And this is, yeah, an extreme call skew for a company like Intel. Let's just say that much. Now, the interpretation of this is earnings volatility is being bought, not necessarily sold right now, which means we could see some conviction in upward mobility. Longer dated calls, which also means that there's some patience here. And this lines up with foundry optimism, the CHIPS Act support, and 2026 turnaround narrative. This is what we like to call dealer-friendly flow, not necessarily lotto tickets. And finally, we have Tesla. The bell of the ball. We had 18 million in total overall flow, with 4 million going into calls against 13 million in puts, with our most active contract of the day. Oops, wrong window there, mate. Our most active contract of the day were the 425 calls, which are a little bit in the money. Bought some of them out of the money earlier in the day, but after that late day surge, shockingly, that thing just pumped up. So again, Tesla, it's a casino. So, I mean, the flow scanner is telling us it's defensive and emotional right now, kind of like a teenager, right? But what is this telling us? Institutions don't trust near-term upside. Volatility is still being priced higher, and this is risk management, not short-term collapse. Tesla is still tradable, but it's not core conviction long right now. So let's go ahead and wrap this up so you can get on with your night. Today's real story was rotation over liquidation, hedges over panic, and long-dated structure over weekly gambling. The big themes that are emerging are small caps are sniffing rate relief, gold back as macro insurance, tech is consolidating, it's not necessarily breaking right now, and dealers are staying balanced, not trapped into one side or the other. This is how smart money trades uncertainty. If you want levels, strikes, and dealer positioning behind this flow, that's all inside Investor Central Club. Use that code again, StacksApex20, to pretty much get that alpha every day, so you don't have to rely on me to break it down for you. You can start breaking it down for yourself and join a great community of traders. All right, if this video helped you, make sure you like, subscribe, and drop a comment. Which ticker should we break down tomorrow? This has been Max Pitts with Trades and Gains, where we don't guess, we just like to follow the money. I'll see you guys in the next video and hope you all have a great night.